Now, the net worth method is based on the theory that increases in your net worth or your capital during a taxable year, adjusted from any what non-deductible expenditure and non-taxable income, must result from taxable income. You see, all the methods we have looked at, they all go with a specific premise that whatever income you might have made came from what, how much you what you put in your bank and how much you spent. True or false? True or false?
True.
So we are saying that your net worth, are you getting it? Your net worth is actually the difference between your opening and your closing what? Capital. Do you understand? So mostly we get our net worth as our what? Our savings, which is how much we have in our account, plus our drawings. Okay? Which is our personal expenses. Remember that I told you that your total income is always what? Your savings plus what? Your expenses. Do you remember that any total income that would have come is what you are going to now save and use some to spend? Meboa. True or false? True or false?
I missed your course.
True.
Yeah, and you either put some in your account and you use some to pay for your expenses, right? Now, this is like your what? Your total income that you should have received, right? And your total income you should have received, we are now going to take out any income that is not taxable. So we are now going to less non-taxable what? Income from this, so that we can only get the part of your income that is what? Taxable. Do you get the idea? So this becomes your what? Your taxable income, which we are now going to tax you. If you have any allowable deduction like capital allowance, reliefs, and the rest, we can what? Now deduct those things before we actually tax you. Now this becomes your taxable income. Now this savings is actually what? The increase or decrease in your capital. All right. And that's your closing capital minus your opening capital. Meaning that at the start of the year, if I had 10,000, right? And at the end of the year, I had 60,000. It means how much did I save during the year? Is it not 50,000? 50,000 now, if in Hefa, it means somebody either gave you money or you did something that brought that 50,000. True or false? Does it make sense? You see, this year we are coming to audit you. At the start of the year, your bank statement told us you had 10,000. But at the end of 2026, your bank statement is saying you have 60,000. That means some 50,000 came in somewhere in the year. True or false? Where did they come from? Is it not an income? So that's why we take what? How much you saved during the year, and then what? Your drawings. That's your private expenditure. Together gives you your total income. Then we take out any, because this total income could also include something which is not taxable, like gifts and donations. I get it, that are not taxable. We take it out so that we get what is taxable. Makes sense. So let's look at a simple question, then a long one, which is a past question. Now, Yao is a wealthy businessman in Accra. At the beginning of 2023, his net worth, I guess, which is your assets minus liabilities, that is your capital, right? Your total asset minus your liabilities was 2 million. By the end of 2023, his net worth increased to 2.3. During the year, he reported taxable income of 100,000 and spent 100,000 on personal living expenses. He also received what? 50,000 from a non-taxable investment. The GRA decides to use the net worth to verify Yao's reported income. So how do we get net worth? Or how do we get taxable income using net worth approach?
That is savings plus expenses.
Yes, plus drawings. The expenses are called drawings. How much you drew from your account to spend, right? So your savings minus your drawings minus what?
Becomes the total income minus non-taxable income.
Yes, so that is it. Thank you very much. So this is how we get our taxable income using the net worth what approach, right? Okay, good. So now we have our net worth. So let's see. Your savings is actually equal to what? Your difference in capital, right? So that is what? Your closing what? Capital, or your closing equity minus what? Your opening what? Capital. Oh, is this thing behaving like this? Okay. Okay, so this is what we have. Now, let's look at it. At the beginning of the year, his net worth was how much in his account? No, Kita saying. At the beginning of the year, what was his net worth?
2 million.
Okay, it was 2 million, right? At the beginning of 2023. Then at the end of 2023 was how much?
2.3.
2.3 million. That means how much has been increased? What is his savings?
300.
Okay, so that means at the end of the day, if all your assets and liabilities, the net was 2 million, and now it's 2.3, it means 300 be if you baby be count when yes sir. Misha no nam from sisi o venza. 300 be a venza no. Do you understand? 300 we not the other venza no. So we need a share of it. You get it? You made something good from that. All right. So we are saying that this is his savings, but was there any drawings during the year? Living expenses? Was there any drawings during the year?
Yes.
So what's his total living expenses? They said it's 100,000.
100,000.
Is there any non-taxable income? Was there any non-taxable income?
50,000. Yeah, 50,000.
Okay, 50,000. Okay. So now we have all the data we need, right? Can we establish his net worth or his taxable income? Yes, we can. So we are saying that, okay, sisi ano sika se no nyae, yenim se waboka 100,000. Or was sika about 300,000 came in during the year, no some boka 100,000. It is a total sika by 400. But out of this 400, we know 50,000 out of it is not taxable. So take the 50,000 out. It means that roughly he should have made total income of 350,000. True or false?
True.
But then how much did he declare to GRE?
100,000.
Declared to GRE. So he only declared 100,000 to GRE. Tinechi go and Nechi go. Nechi go 250. Okay, so that means there's been an under declaration, right? So based on our audit, we have come up with an under declaration of 250,000. So this guy, GRA, will hold him responsible. Are you getting it? So he has now to object and prove to GRA that this 250 is not real because this is just circumstantial evidence. Doesn't make sense. You see how interesting these things are? All right. So now that we understand this, I think we can take a bigger question. Please don't be scared. Don't be scared. Don't be emotional. Let's look at this question. Based on this, I hope we can do this question. Empty barrels make the most noise. Can we do this question? Can we? Oh, let me hear. Yes, we can. Can we do this question?
Yeah.
Let's try.
Good.
So if it is net worth, I can do it.
Yes, it's net worth. So let's continue. So Sikeni Richard returned to Ghana in the year 2016 after a long stay in Pakistan, where he worked as a special agent to the militant group. Hey, not a spy. Wow. He opened a bank account in the UBA and paid 50,000 inside. So that 50,000 that you have put into UBA, that's your starting capital, right? So let's start getting our data. So in exam, if you are confused, don't worry. You just write the word let and start putting your data together on a rough sheet. They mark it. So I can say let opening what? Opening capital be equal to what? 50,000. Now me there are two. Somebody will tell you read question twice. It's never true. Start reading, start putting down your data. It's the data that is needed. You save a lot of time, right? I'll give you the strategies to pass to, so don't worry. Now look, in January 2016, he started his business with that capital of 50,000. True. That's what you put in your account. Now, he traveled to the Netherlands, Italy, and other countries to buy goods for sale in Ghana, dealing mainly in men's shoes and suiting material. Osikeni has no store, but he has customers at Opera Square and Oxford Street, Osu, who take his goods on credit basis. He does not keep records of his business activities and thus cannot submit accounts. So this alone has told us that we are definitely going to use indirect method. Assuming the A part of the question told you, what method can we use to determine his tax liability? Then, based on what he said, he doesn't keep records of his business and cannot submit accounts. Alone should tell you that based on the scenario, we can't use direct method. True or false? He has incomplete
True.
records. So this is one of the circumstances for which we can use what the indirect method to determine his liabilities. Does that make sense? Eto assume.
Aye.
Yes, please.
Good. So in January 2016, when he arrived in the country, he lived with his friend Edem for a few days before renting a flat at what Roman Ridge, paying rent of 500 a month. Mebwa. So 2016 expenses, drawings. Thank you. You see how easy this thing is. Yes, it's all about applying your knowledge. So drawings, 500 a month, right? Rent, 500 a month. So times 12 months, that would be how much? January no rent mebwa. So 512. Is it 6,000?
6,000.
Yes.
Okay.
Yes.
Then they said what? He furnished the flat at a cost of 15,000. Mebwa. So furnishing 15,000. Okay. Then he brought along with him from Pakistan his DVD player, set, refrigerator, freezer, among others, with a total value of 85. This 85, can we bring it? Can we add it?
No.
Why? Because he brought it from Pakistan. He didn't spend. We don't know when he made these expenses. Maybe he has even been using it in Pakistan for more than 10 years. We don't know. Do you understand? So we can't touch it. So it's there to confuse you. Osikeni has two children who attend a preparatory school in Jaulu. And the fees for the children for the term is 3,000. So school fees, right?
Yeah.
Okay. How many terms do we have?
3.
3 times.
3 terms. Okay.
So 9,000.
Okay, so 9,000. Okay.
Yeah.
Then they said he engaged a housemaid who is paid 1,000 a month. So housemaid, so by just saying 1,000 times what? 12, right? Housemaid by just saying 12,000. Mebwa. He spends an average of 2,000 a month of food, water, and electricity bills. No be so? Food and utilities. How much does he spend?
24.
2,000 also by 12, right? Which is how much? 24,000. Not so. Is that all?
Yeah. No.
So Sikeni joined the Elwa Kifit Club in May 2016 and contributed 5,000 to the activities of the club. So club contribution. How much did he contribute?
5K.
It's just a one-off transaction. It's not monthly, you please. They just said 5K, right? And after training sessions on weekends, he visits an Omutuo joint with some friends and spent 500 a month on Omutuo. Wow.
Osikeni.
Paddy no live life no. So he visits Omutuo joint 500 a month on
Time
such
no dey.
occasion. So Omutuo joint. So Omutuo joint, how much was he spending?
So that should be 6,000.
500 every day.
Times per month.
So 6,000.
Times 12.
It can't be
6,000.
12. This is why I got you. May 2016, not joining here.
Okay.
Do you see the
So
trick?
that's 8 months.
8 months. So you have to do 12 minus what? January, February, March, April. Okay, so 4 months is out too. It should be 9 months. 12 minus 4 should be 8. Sure. It's a 9. 8. Yes,
Eight.
yeah, because he joined in May. So up to April, it wasn't there. So times 8 minus 5, 8. That's 4,000, right?
Yeah.
Omutuo 4,000. Now for the 150,000 go Mubut go di Omutuo Saturday. Hey Charlie. It is serious. Okay, so let's continue. Is that all?
Okay.
So the
Yeah.
third Osikeni acquired a plot of land at Oyarifa for 30,000, which he intends to
Hey.
develop as a. Yeah, this is an old question. Hey, nah, no, yes. So, land, right? Land, how much? 30,000. A cow boy, okay. Then during Christmas break, it's supposed to be 2016, I think, when I was auditing it. He visited his parents in Kumasi and he bought for the parents and other family members, right? At things that amount to 5,000.
Okay.
So in that case, we have what? Contribution to family, right?
Yep.
Donation to family. How much?
5,000.
5,000. Okay. Now, on the death of his uncle in September, he contributed towards the funeral, 2.5. Funeral contribution. How much did he contribute? 2.5. Not so. Whereas donation contributions he received from friends and sympathizers came up to 14,000, right? So that one is an income, Meboa.
Sure.
Can put it here. So donation received for the funeral. Hey, what is happening? Assembly here. I don't even know what is happening. So donations received coming. Donations received was how much?
14,000.
14,000. Okay. So this one, we know this one is a non-taxable income. Yes.
Yes.
Obi who are GRA and tax. It's not fair. Ah, o uncle upa no BIA near say bitia tax also. And our body. I got GRA where you go. Got GRA go for a go of anyway.
So sir, that one, how do we treat it?
It's a non-taxable income.
We put it aside. You note it aside.
Yes, a non-taxable income. It's
Okay.
not taxable. Do you get it? Okay, then what else happened? They said Osikeni's wife is still in Pakistan since she had to wind up her business. She remitted Osikeni an amount of 30,000 during the year as a contribution to the returning home to Ghana. That amount that his wife sent him, is it taxable or not taxable? Remittance from wife, is it taxable or
It's
not
not
taxable?
taxable. It's not taxable.
It's not taxable. Thank you. How much was that? She remitted 30,000, or is it not 30,000? Yes, to her husband. Okay. Now, they said his bank account. This same person, he started with bank account balance of how much?
50,000.
He started with bank account balance of 50,000. But they are telling us that his bank account showed a balance of 65,000 at the end of the year. And his cash on hand
More.
is also 1.5. So what is it telling us now?
He
So
have
close,
excess.
yeah, so his closing capital is how much? How much is in the bank now? He has 65,000. And he also has cash of how much on hand? 1.5.
1.5.
So that means his total closing capital is how much?
665.
66,500, right? Okay, good. So we have this. Good. So now have we established everything? Yes, we have. So kindly close this up for me. How much is his total expenses? You see how this question is? And this 20 marks. Can you imagine? I didn't have to say.
Hey.
And then I mean, it's just the same thing we know. Savings plus drawings and
The
non-taxable
markup
income.
is so conscious.
Oh no, it shouldn't be. I gave you the approach, right? Come and look at one. Don't worry. As we build, you'll be fine. Don't worry. And that's what audit stands for. And I win him. We'll come and deal with the markup approach. Again, we'll solve
Please.
questions. Markup approach. Is it clear? So some of the expenses.
One two 500.
Please, I'm waiting for the figure. So now you didn't get
We have given the figure.
Okay. How much did you get?
You say 112,500.
Oh, 112,500. Okay. Let me go. 112,500. Okay. So 112,500. Okay. Good. So we already had non-taxable income to be what? 44,000. Anna, is it not 44?
Yeah.
And then let's look at the savings. Savings, you're saying? Say savings, we know is closing capital minus what? Opening capital, right? Okay. So opening capital, he started with 50,000. As of now, his closing capital is how much? 66,500. No, be so. So that means how much is the increase?
16,500.
16,500. Okay. So now, can we do taxable income for this guy? Yes, we can. So how much is his taxable income? How do we get taxable income under net worth?
Savings plus drawings.
So we take his savings plus his drawings, which is his private expenditure, minus what?
Minus non-taxable.
Non-taxable income, NTI. So in that case, his savings we know is 16,500, right? His drawings was 112,500. Then minus non-taxable income of 44,000. It just said during the whole year, no, who receive his scheduled was saying 112,500 plus what? 16,500. It just all receive his total 129,000, right? But out of 129, we know 44,000 yesika yen to mean tax. Do you get it? Inti ahi ina ewa say to me tax 85,000 Ghana cedis. Do you get it? So this is what GRA can tax. But however, if this is your assessable income or your taxable income, did this guy have some reliefs? Yes, he did. What reliefs can he have? So I can less the reliefs that we can give him if he has only applied. And the only relief I can see, he has responsibility, right? Or we can even give him
Education.
marriage. So he has
Marriage
responsibility,
and education.
which is now 1,002, and he had 2 children, right? So we can give him child
Yes.
education, which is what 600 per child by 2 children, which
Per
is also
child.
1,002, right? So that now gives him his chargeable income, which we are now going to use the graduated rate to now calculate.
2,400.
Do you get it? That's all. So these are the indirect methods.
Sir, would
Yes.
the graduated rate be provided?
Yes, if the need be, they will provide, but sometimes they don't.
No. There's an amendment. I don't know if
Yes.
they are going to provide.
So mostly they will, if there's an amendment. But if they want, yeah, that's it. As of now, are we okay with indirect methods? The indirect methods, area.
Yeah, Prof.
Yes, please.
Prof.
Yes, please.
The amendments she's talking about is what is on that is going through Parliament. So for the purpose,
Do
I
you
don't
mean
think
the income
it will
tax
be
bill?
applicable because
Do you mean
it
the
has not
income tax
actually been.
bill?
Yes.
Yeah, the income tax bill there.
That's why
Please
she's
ignore
referring
the
as an
amendment.
amendment.
Why? If the question demands you using the graduated rate, it will be provided. So what is provided is what you are going to use.
Definitely.
Yes, but the T 2014 there will have not been amendment to what was actually approved. So the bracket is 35%.
Okay, so